Hey, it's me again, Megan Proper. In our part 4 video in this educational series with Michael Mullis from the Mortgage Teacher in London, Ontario, we are going to educate you on pre-approvals, appraisals, and how that can help or hurt you throughout your journey, and how to set you up in a great financial position before you even start house shopping. If my appraisal comes back short, or basically your pre-approval versus what the bank's actually going to lend you and how those correlate, because that's a big thing. People with me go into discussing, I'm pre-approved though, Megan, like I can go to 400,000 on my offer. And I was like, well, I don't think that it's going to get appraised at that for a 2-bedroom half bath. And then you guys got 50,000 to come up with the difference, right? And they go, well, what do you mean I'm pre-approved? So let's just talk about basically a pre-approval versus, how that correlates to an appraisal. And the difference when, let's say my client, let's use a scenario to make it easy. My client told me he has a $400,000 budget and he wants to put 400,000 on his offer with me. From, let's say, knowing the area, my professional advice is I don't think it's going to get appraised at 400,000. What are the risks of my buyer now from coming to you, and what could happen if the appraisal does, let's say, to make the numbers easy, comes back $25,000 short?
Okay. So just to answer that little quick part, say it were to come short, then depending on how it all sets up, the client somehow would have to come up with the difference.
Okay, good.
Now let's back up a little bit about pre-approval, the process. Even the one question you triggered a light bulb off there when you said a client goes shopping and I want to shop for 400,000. I would nip that in the butt right away as the mortgage person. And that's why at Mortgage Teacher, this is why a lot of realtors are taking our path, because you have someone that just is thinking about getting a house. Typically this is how it works. I don't know, maybe 390, that one's 450. I don't know, can I afford it? And then they play with the mortgage calculator, and this is what determines whether they should or shouldn't, and it's how much they can afford per month. Right? So when you say, listen, bounce that off a Mortgage Teacher, which you do, thank you. I talk to them, they say, well, I want to get pre-approved. I said, okay, well, let's talk about that. And right away I say, what can you afford per month? That's my first question always, because
I think I almost remember that with me like years back. And I was like, what do you mean? Like, what do you mean I can afford?
Well, and then sometimes a client says 400,000. I'm like, no. I help you determine that, because whether you buy for 450 or you buy for 380, whether you take a variable rate at this rate or a fixed rate at 6%, like no matter what you do, your income is your income. This is all I bring home, Michael. This is all I can do. Therefore, I think that's what should be the determining factor. So now a client says, well, I was playing on a mortgage calculator and I want to pay 15. No, sorry. I don't want to hear what you want to pay. I need to hear what's the most you can and cannot pay. I'm here we'll steal this from OLG. Know your limit to play within it. So then what I like to teach is every $10,000, you play around with it. So what's 400? What's 410? What's 420? Just so they know that if it's $50 a month, okay, if I buy for 400, the payment's 1,500. And if I buy for 410, 420, 430, it's, 1,550, 1,600, 1,650. The reason this is important to do it the pre-approval is so when you're out shopping with the client, the realtor, and it's 9:30 at night and they're going back and forth between 10 and 20 grand, they need to know how that changes their life so they can make educated decisions.
Yeah.
So to back up, this is what I say. I don't like the word pre-approval, because a lot of people think, oh, I'm pre-approved, as if, what, you have $400,000 in a hockey bag just waiting for you to pick the house?
Yeah, no, I agree. I agree.
Right. It means that because of your income, and you want to look at it all, and you should line up. So it means the odds are really good. The odds are 90%. You should be able to get it. Now, you might pass as the individual, the client, but the house might fail. You gave one example. What if the appraisal comes back lower? What if we had some that they did some, not even a home inspection, just an appraisal? What happened was somebody else tried to buy a house and it fell apart. Then later, my clients went in to buy it, say it was with you, and CMHC already had history on it that it had a cracked foundation. So therefore, they turned down, they said, we'll only lend this much. We had one that had a marijuana grow up in it in history. That's becoming popular in Canada.
Yeah.
So maybe they said yes to the individual. You are pre-approved, but we don't have a property yet. Once you put the property, I mean, that's a pretty big key component of the equation. So there's no such thing as a pre-approved certificate, a ribbon on it, put it in a frame, put it on the wall. Like you're not 100% approved. It just means you're not wasting your time. You and the realtor can go ahead and move ahead to put an offer on a place because it's worth it. And then typically it's conditioned on financing, right?
Yeah.
So I like to call it pre-educate. Pre-qualify is a strong word. Run your numbers with accuracy and then know your numbers within $20 or $50, like the example I gave you.
Yeah.
So then the job is, well, teach the client so they know their limit, and then they can go and make educated decisions within 20 or 30, 40 bucks.
Yeah. And I like that too, because that's kind of where I was saying, you asked about the booming market with rural property. And of course, that would be a dream for me to have that going back to my roots. But at the same time, I'm realistic, and this is how I discuss it with my clients. What is your lifestyle like? Do you like to eat out? Do you like to vacation every year? Do you have a young family? Like, what are your goals? Because my spouse and I'm a foodie. I came from a food background. I like to go out and try new restaurants. We like to go out and golf. Those aren't cheap things. So do I want to be house broke, or do I want to have like a mediocre house that has shelter? Like I have all the things. I have water, I have heat, I have the necessities. And then what allows me to go and do those extras that are not necessities is because I compromise on the house. So I think that's where, the discussion with people needs to be like, what are your goals, and do you want that $50 extra a month, like you said, and how that makes a big difference when we're putting offers in, or when you're sending, your conditional offer to your lender. Are you okay with that $50 or $60 a month being gone? To me, I usually am. I always relate things to food to people.
Yep.
If you eat out $10 a day, that adds up, right? So it's just like about a lifestyle, and then that's how it correlates into what you guys teach, which I like. Not just saying, yeah, this is how much I can afford to spend on a house. Well, let's talk about your lifestyle. And I think that's where your first question comes into. What can you pay?
Yeah, I mean,
people don't put the two together sometimes, right? They think about, I just need a house, but they forget how they actually want to live moving forward once they got the mortgage.
Well, and that's where our job's a little bit unique, because it's a free service. I don't charge you $1.
Yeah.
It's like, take my information or tell me to go away. Like it's okay. There's no cost, no obligation.
Yeah.
And we don't even get paid on rate. So I'm not trying to give you a higher rate. So what's interesting about that is it seems like there's a whole bunch of mortgage agents out there. I can get you a mortgage. I got a friend that can give you. I don't need help getting a mortgage. That's easy. There's 600 agents around this area probably. But who's going to sit down and help me get rid of this dang mortgage? And this is a problem that the consumers have gone very wrong. And this is the few 1%. I had a lot of people call in and say, I can afford $3,000 a month. Mike, I'm going to go house shopping. Megan's going to help me find the house. And we've done all the numbers, and I can afford $3,000 a month. Well, lo and behold, they find the house, they sell, they're good to go with you. And I finally settle with a rate. Now they're moving in 2 weeks. We sit down to go over their final numbers before we send it to their lawyer. And it turns out their payment is only $2,200, because rates are so low, because everyone's looking for the lowest rate. While the lowest rates were here, what did you do? Did you take advantage and put more down? No.
Mm-hmm.
And that's what happens when you come out, just ask for the lowest rate and the lowest payment. You now set the bar at 1% and 2%.
Yeah.
People are going to come up for renewal like they are now and go, whoa, now my payment's up $400 a month. My clients will come up for renewal and go like, wow, rates have caught up to my payment, but I have been putting an extra $200 bi-weekly, $400, that extra. So for our example, say they said $3,000, the payment's only $2,200. I would have them be putting $800 in a sheltered account in the meantime, automated. So then now, instead of only paying off $16,000, you paid off $40,000 a year maybe, and now you've knocked off $100,000. So while rates were low, did you pay more off? That's what you should do. And those are the type of systems that we help. Because why? Because now the realtor calls them a little later and they're like, you want to what? We just paid off an extra 100 grand on this. Now I want to go buy a house for 850, not 7, because I paid more off and I can go buy for more. They're more educated. They're more in power. They're more in control of their numbers. And that's the way it kind of should be. It's like, just like financial planning reverse. Who's going to help me get rid of the debt? And hey, if you can find someone for free, bonus.
Yeah, no, and I can contest to that because it's the first thing you did with us, discussing what are your money things, basically how are you with money? Do you need it to be a certain rate and amount every month, or are you pretty good with your money? And my spouse and I, we put that extra money amount to come down or to bring us up to what the rates are now, scary up from what we had our variable when we started. Being a young family, we don't push all of that onto paying the mortgage down at the end of the year because, you told us, well, what if the furnace breaks? What if this, we're paying daycare and we're buying this for the kid because it won't stop growing every 2 weeks, right? Those are all things that I never thought of that people need to know. And we still put that money away every month. It just comes out and we set it up with our bank that it's easy money. It's like going out for lunch, every week. It just goes. And then if there's an emergency or we want to pay down at the end of the year because we didn't have a furnace break, and unfortunately we did the very first winter we moved into our house. So it all worked out. But yeah, they're all things people, I love what you said. People want a mortgage, but it's about getting out of the mortgage. So
you just brought up you just remind me of a fantastic point that, did you know? But a lot of people don't even know that some mortgages come with home warranties. You're like, well, what do you mean? Some banks realize that everything you're putting into your house is right to buy it. You saved up your whole life. Now you bought your first house, you move in, and it ends up being that old 1980 movie, The Money Pit. Mm-hmm. Right. And next thing you know, your furnace breaks down. We're like, I don't have $2,000 to $4,000 to fix this. There are coverages, and people don't realize this, that you can move in and let the bank know that something broke down. They send a company out and will fix it or fully replace it. I have clients that take advantage of this pretty serious. And so now that's the cool thing about being a broker, being unbiased. Say I have 4 banks, sitting down to make a final decision for a client, and all the rates are probably pretty close to one another. They're all going to be within $10 or $20, $30 of one another. Mm-hmm. But this, allows you to have this warranty for free, and this doesn't. Maybe that's the winner now because your furnace and things are covered. But just something new to some first-time home buyers, that products like that exist, because a lot of people don't even know they exist.
Yeah, no, for sure. And I do remember that. I can't, it was so long ago.
You have to look back in your file.
It almost triggers a memory that maybe we had that, but either way, yeah, it was something. I'm just saying, people plan for emergency, because especially in a market like this where you're scared about what's going on with the market, it's so nice. We're going into winter. If you're moving to Huron County, you watch my pros and cons video, it gets cold here and you want that furnace running, people.
Yes.
So yeah, I think that kind of wraps up this first segment of just what's going on. And I love all the information that we had. I hope you're ready to implement some of those tips into your finance or real estate journey to help you achieve your house goals. If you're looking for more information on talking to a mortgage broker, you can find the mortgage teacher and my contact information below. Talk to you soon.